2 a.m. EST. And so we are starting the live show, and it's actually a pretty strong dollar market, which is good. I mean, any volatility is good. It's just whether a dollar is strong, whether it's weak. We like either, well, at least I like either very strong or very weak, right? Because either way, what you're going to get is volatility. So I'm going to go ahead and start by looking through and seeing if there are any trades available. We do have coming up in about an hour and I think 45 minutes or an hour 15. Let me see. It's in 9:45 EST. It's an hour 15 from now, really an hour 13. We're going to have the flash manufacturing PMI. And overnight was all of the like European PMIs, German, French, and let me see. The Bank of Japan press conference happened overnight. Their policy rate is they're going to remain unchanged. So loose policy, money printing, that's just not unexpected. But there is word that Japan might go ahead and make a change. So that can happen. Anything can happen, but right now they're going to go ahead and continue with their policy, which is basically yield curve control. If you want to look at the kind of ideal future, and I mean ideal not from reality's perspective, I mean ideal from certain policymakers' perspective. If you want to look at this quote unquote ideal future of U.S. and Western monetary policy, then look to Japan, because the yield curve control is something that they're interested in doing here, and in effect have been doing, just not openly and not strictly. So we've done classes on yield curve control. I don't think we're going to address that today. That's just basically messing with the bond market. If the yield curve is kind of a top-down method of controlling expansion and contraction, of economies. And so, if say higher yield bonds are being bought more so than they want, meaning if higher yield bonds are being bought or sold or whatever the issue is, and it is kind of breaking their model, then what they will do is they will go ahead and buy them so no one else can, or they may sell more. So it's just kind of like it's like stuff in the market with products that disallow the market itself from operating. So in a sense, it is a top-down form of control, and we're not going to get into the theory of it today. But it's just kind of a tug of war between long-term and short-term bonds, and whether or not, if the popularity of a bond goes up, then the yield goes down. So, swiping those up before everybody else can, or, might actually push that popularity up to decrease supply and push yields down. And, they might do that on the long bond instead of short bond because they want to control the difference in yield between the long and the short bonds. It's just a bunch of jiggery. But with that, it does come a certain predictability with economies. But in the end, you're just kind of, you're not really changing the real wealth of the world. Okay, so it's our job not to worry too much about these things, to understand which way the wind is blowing on things like that, so that we can take a look at the charts and understand how that affects the charts. And then we can extract money from the charts, and we can take that money and put it into real wealth. At least that's what I do. You all can do what you want to do. All right, so let me go ahead and put the link over in the Rogue Discord. Just a hint to some people, we may end up moving away from Discord. We'll see about it. We might move over to Telegram, and anybody listening privately right now is on Telegram. They know that already. If you're on Rogue and you're not on Telegram, I would say grab Telegram. Because Discord is starting to get a little strict in ways that YouTube can be strict, and that doesn't bode well for anybody that goes against the narrative. Okay, so let's see here. Okay, so strong dollar is going to push assets in a given direction, right? I know that Jay asked a question earlier today, and so we'll address that to begin with. Jay is talking about wanting to know how to profit from the rise in oil, which market players would benefit, who gets hurt, which one moves first, This is not a trade the news question. It's an oil market structure question. Yeah, I mean, as far as structure is concerned, all I care about are the charts. I can tell you right now, structurally, though, I think what V might say, if he were here, we can address this when he comes on shortly. V is going to join us in about 23 minutes or so. I think what would the way that would be looked at. Let me see if I got a trade here. Hold on. I think we do have a little bit of a trade. Give me just a moment. Let me share the screen real briefly here so you can get into trading. I think internal combustion engines are going to actually continue to be popular, and more so than all this move towards like electric vehicles and all that. I think they're finding, unless the technology can improve on electric vehicles, then they're going to hit their head on a ceiling, because we talked about this yesterday on the Thursday Rogue show. The only reason that the electric vehicle market has been able to expand as it has is because of subsidies. This is because of government forcing money into these projects that are not actually profitable as compared to internal combustion engines. So they're saying it's to push the technology and save the world, and I'm sure there's a lot of people who believe that, but the reality is that these vehicles are not as efficient as internal combustion, never have been. They actually are environmentally more harmful. The energy that they use comes from fossil fuels for the most part. And I get it, the idea of okay, so we have to implement sometime, right? We have to try to push the tech at some point. I understand that concept, but I don't think it should be done at the detriment of economies. I think that more R&D needs to go into these vehicles, So, and that's just my opinion, and I'm sticking to it. I mean, it's not just my opinion; it's many people's opinion. It's a lot of scientists' opinion, quite frankly. So, might have missed the move on the CAD. This was a hard trade to try and predict. I mean, if I was really sitting on top of it, I would have had to enter this trade about 6 minutes ago, but the CAD popped up. We do have in another hour 45 some more news coming. So this is the USD CAD. This is a way to trade oil. The Canadian economy is largely based on oil because of all the oil that gets produced out of the Alberta province. A lot of Western countries don't manufacture like they used to, and a lot of the leadership of these countries is trying to move over to a more colonial model, believe it or not, where they just go ahead and extract natural resources out of these countries rather than manufacture and help just spread the wealth around to the common citizen. They would rather pull natural resources out of the ground, and the wealth gets transferred to a handful of very wealthy people, which is rather oligarchical. But that's where it is. And Canada is pretty much hostage. So there's no there's no getting around that for Canada right now. They are a captured country by those who would go to such a model. So that is what that is. Just the same. Let me see. The move I'm looking at might be kind of more related to the dollars than say the Canada. So if I roll over to EU or USD, we'll see. Yeah, see this. There's a pop down on the dollar on the low time frame on the EU or USD. So there has been a bit of a move. This move here overnight that happened. This was part of the European, like France and German PMIs coming out. I'm assuming this happened at 3:15 EST. So let's roll over to our calendar. Where is our calendar? Did I get out of it? No. Yeah, so 1:15, 1:30, European, German, Flash, French Flash manufacturing. So, the power in Europe has to do with Franco-German manufacturing. So their PMIs are going to matter, which is the PMI is a measure of manufacturing. What it is I'll read it as defined. It's a level of diffusion index based on surveyed purchasing managers in the services industry. We've covered this before. So the more they're purchasing, the better industry is. The less they're purchasing, the slower things are going. And right now, the French PMI was significantly lower, about 7% lower than expected, which is no bueno. The German was actually up about, I'd say 4% on one measure, for services, right? And for manufacturing was actually more or less expected. So it looks like the Franco manufacturing being a bit lower, both services and manufacturing is probably hurting things. Hence the euros dump around that time, but there was no way to predict that. And as you all know, I don't trade those kind of events, so I did not stay up to do that because I actually have, as many know, a new addition to the family, and getting sleep when I can is important. However, it looks like the dollar is flipping around, and I'm not sure why. It might just be that it finally hit that point in the charts. Because if you look at this has been a move down since yesterday, 24-hour, just this being crushed downwards. The dollar going up and all assets against it heading down. This is the Canadian dollar, for one example. So if I were to, that's USD CAD. If I saw USD JPY, that's a little different. The JPY is funky like that, but USD CHF is probably going to look similar. We'll see. No, not at all. CHF is quite the opposite. I'll have to see why that is. It looks like something happened with the CHF on 21 September. So yesterday early morning, there probably was some Swiss data that came out that's pushing the Swiss. Well, either way, the dollar's getting stronger against it. So maybe that was unique to the Canadian dollar, what we're seeing. But what I would do is to trade oil, back to that subject. What we're looking at is on a higher time frame, right? If I were to overlay the USD CAD with oil, you'll see what's going on as comparing the two. So let me roll over to a higher time frame. Let's do basically the daily. So we're going to look at a daily chart, which means that each of these candles that you're seeing on the screen is worth about a day's worth of price action. So ignoring all the little arrows and dots and all this other stuff, just look at the candles and you'll notice that, price goes down, price goes up. And if I were to overlay I'll hit a plus symbol, type UK oil, and we'll do a new price scale. You'll see over time, there is a correlation. It's not as clean as it could be. And in fact, it's, I think it's going to be more clear on the macro. So let's go ahead and undo this and compare on a higher time frame. Okay, USDC. Okay, so we're going to go to basically the weekly chart. And we'll see if there's a more evident correlation. Okay, let's see. Well, actually, it's interesting. There's a pretty good correlation, but you see here in 2020, the USD CAD have actually quite the different spike. This is during the COVID crash. So I think oil went down during COVID crash because people assumed a lot less oil would be used because of lockdowns. So there is this kind of COVID period, COVID era, we'll call it a discrepancy or diversion. But here you see when things normalize in May of 2021, Canada goes up, oil goes up. If you look back through history, let me see here. I don't know. I mean, it's correlated on the short term, certainly, but on the long term, it's kind of like half correlated, half not. I mean, you got a big rise in the USD CAD here. Oh, you know what that is? Okay. Sorry, everybody. It should have an inverse correlation because the CAD is correlated to oil, right? So this is the USD CAD, right? So CAD is the second half of the pair. So the only real way to do this is to go CAD USD and put CAD first. Like, why is this not correlating? Now you're going to see the correlation. Okay. Sorry, everybody. This took me a second. Still waking up. So now it's clear with the Canadian dollar in the front of the pair, right? Like this, CAD USD. So with CAD being first, then the price of the Canadian dollar is what's actually going to be more easily visualized. And you can see it follows along with oil pretty clearly. Okay, there we go. Like, why is this like so diverting? Very clear correlation here. It looks like the Canadian dollar is a kind of leading oil. I know Jay was talking about yesterday some markets he saw where certain things were leading indicators. It doesn't mean it's always going to lead, even though it led right here, for that short time. So, you're going to, if you really want to try to use a, currency or another asset to say, hey, this is a leading indicator, like you got to go back and test it over time. So like in this case, looks like oil led the Canadian fall right here. Oil led right here. Looks like there's no leading here. It looks like Canadian dollar led the dump right here. So they lead each other. It's not necessarily a one leads the other all the time. For example, Canadian dollar led the move up here. Oil followed. So you would have to go back and test. Like here, oil led. So I'm not seeing a one leads the other scenario. So if you really want to watch the two and say, hey, one's falling, the other might fall, you can. You're going to be spending a lot of time looking at those particular charts. So let's see here. Someone's talking about DLive. Oh, is DLive, DLive got strict, huh? I didn't know that. I thought DLive was chill. All right. Good to know. Yeah, I think everybody's headed towards Rumble, Valley Girl. It's an issue. If you're gonna silence people, if you're gonna monitor or silence their speech or anything, all they're gonna do is push people to what do you call it? Content, whatever producers. You're gonna push people towards platforms that don't silence people. So that's why competition is important. We want to have places like Rumble that can go ahead and not censor people. All right, we got Jay Martin busting, breaking, taking, shaking, faking. Yeah, that's almost sounds like some what's that group from back in the 90s that sings about like sushi and raw meat? The Bare Naked Ladies. I'm gonna shake, shaking, bacon, dicking, drinking, bacon. That's what it sounds like. Valley Girl says Russia cut everyone off from buying their oil. Well, I didn't know that. I know Russia has been selling oil. I know they're cutting people off in a sense from grain. They just want the hostilities to end, although many will argue that Russia is causing hostilities. It's a complex scenario, who started it, but many people feel that it was actually started by certain elements in Ukraine and the West earlier in last decade. I'm not going to go into politics here. Be careful of Rumble too. Why would I be careful of Rumble? I haven't heard any problems about Rumble. I haven't heard of anybody silencing anybody. I would be interested to know why. Valley Girl says it did just happen. Russia cutting people off in oil. Let's see. Russia. I'm going to see if we can find any articles on that. Russia cut off oil. Okay, let's see. Looking on a different screen. Oh, okay. So, they just cut off gas supplies, but this was back in 2022. Russia cuts gas supplies. Okay, that's all in 2022. Cut oil production. That's all 2022. See here. Why are Saudi Arabia and Russia continuing with oil production? Oil prices spike. Valley Girl, if you can post whatever link where you're seeing that over in our I see Ray talking about it, but if you want to if you want to post a link over in our Telegram, that'd be fine. Ray says Russia cut off temporarily diesel fuel exports. Yeah, because I have a hard there's a Russia-Saudi agreement I'm seeing in the news from 2 weeks ago. Russia extends a 1.3 million barrel. Let's see, is it a cut? Yeah, they're cutting oil. It doesn't mean they're cutting everybody off. They're probably just reducing production. And this is the oil production reduction tends to happen around this time of year because less oil gets used over the wintertime. As as people are just not going to be using as much oil. They're not going to be driving as much. They're not going to be traveling as much. Things calm down in the wintertime, right? Natural gas gets used less because I think it gets used less. I have to look at nat gas charts to really determine that. But I think oil certainly tends to go down seasonally like that. We could look here, 2018. May, June, July, August, September, October. So you can see here in 2018, from September all the way to the end of the year, you have a drop in oil. In 2019, not so much, just kind of stayed steady. Of course, 2020 is going to be weird. We didn't really use that as data because it's just oil just skyrocketing up the whole time. Might be, I don't know, people are staying home and using oil. I don't know. It might just be people are investing in everything and oil is going up. That's going to be, what my guess is. Oil is just rising, and because everything's rising because we're printing trillions. Not worried about 2020. 2021, you see from September to November, there is a drop in price, although it kind of went up and down. So let's go over to September of 2022. It dumps pretty hard from the beginning of September and it ends lower than it started. December of, and now this is the price. This is actually, now here's the thing about it. Just because the price of oil goes down doesn't mean that that's because they're increasing supply, right? It might be that they're cutting because price is going down. So oil kind of, they want to keep things profitable in oil, right? So if the price of oil is going down and then you flood the market with oil, it's just going to force the price down further. And so to keep the price stable, it's just supply and demand. If there's less demand, then why are you producing so much? We got to stop the production so the price stays up, and that's how that works. Okay, so as of now, this time of year, price is going up, and that may or may not have to do with cuts. This is basically a weekly chart, and that news came out on the production cuts. Did I already erase that channel? I think that news was within the last week or two. So just cutting production might be rising the price of oil. So, that's that. Here's the thing about like profiting on this and that and looking at this and that. Looking at these international news and things like that, we don't know shit. And the news that we get is the news that we get. And what I mean by that is that the reality behind the scenes is often very different about the news. And so everybody focusing on, I'm going to look at the news. And look, here's the thing about it. It doesn't matter what the news says. What matters is what the charts say. So if you want to sit there and, analyze oil and read the news and do that, you're going to be spending about, let's just say like sitting there analyzing the news, about 99% of that's going to be a waste of your time. Okay. Why? Because by the time price moves based on the news, the price has already moved. That you very rarely can use news to profit in charts. If you have a very large news event that's a macro thing, then it can make a difference, but the charts are going to tell you everything that the news tells you before the news tells you. So if you want a way to profit on oil, just watch the charts. It's the same thing I always say. There's no need to look at the news of this country's agreement or that agreement. There's a very low probability that anybody's getting any news before it happens. The news is, the word is like, yeah, sure, you got the gorilla. He's dealing with billionaires. What his news that he gets, that's not news. That's word. And so that kind of word is something that I have been able to trust for years and years because I know the gorilla. I've followed his track record. If he's, gives us some clues about what's going to happen, then yeah, we can take advantage of that data, right? But I don't know anybody else that has a track record for that. I know people who say that they have that kind of information. I just haven't followed them for, 7 years, right? I don't know their track record. So if I don't know somebody's track record, then I don't really have any ability to put faith in what they're going to say beyond face value, and then just kind of watch them for a few years and then see how right they are. So, this is what I would do. If somebody is saying, oh, well, I know this is going to happen, I know that's going to happen, watch them and see how often they're correct and take note of it. And after a few years of them being correct, then I might personally feel comfortable saying, well, this guy's been correct like 90% of the time the last 4 years. I'm going to go ahead and listen. You know what I mean? But somebody being right like once, that's, okay, the broken clock is right twice a day. So I would definitely be watching watching whoever is talking about that. Yeah, Jay, Joaquin started a little bit late today. Cool Cat asks, can you look at Dixie? Okay, let's take a look at the Dixie. It's strong. It's the same thing as yesterday, Cool Cat. It's just bullish, bullish up against resistance. So that's in the high time frame. And low time frame is going to be, it's going to want to go up, but it's up against resistance. So it's going to It's going to kind of do these pullbacks, right? So it's kind of in the middle of a small pullback right now, although the charts seem to reflect a short-term pop up. So, I don't. Dixie's kind of good to look at, but here's the problem with that: is that whatever happens on Dixie, that takes me away from looking at the charts that matter. So if you're looking at the EURUSD right now, it looks like there might be an opportunity to enter, probably a breakout trade. Let's see. Yeah, so the charts are bearish, high time frame on the euro. They are. And so what you're having though are kind of like a bearish time with little bullish pullbacks. So what I would the wise thing to do, unless you're kind of hitting it hard, it's like scalping and stuff, I would personally be selling the rallies because it really is in kind of bear market mode. Now this is a long move down on the euro, right? So it may be that we're on the 3-hour chart, by the way. So this is swing trade timeframes. I probably would look at selling once price gets up to fixed range volume profile. On the higher, if I were swing trading, I would probably sell. I think, yeah. So here is the point of control in the most recent move down, right? And we're in a kind of a higher time frame move down. Okay, so let me do this really quick. Yeah, I would probably look for price to head up on, say, like the euro, because you can't. I don't know where you can trade the Dixie. Maybe on. I might be able to trade the Dixie on Prime XBT. I don't know. It's one place to do it. We got the gorilla on. Yo.
Goodness of mornings to all of you.
Goodness.
It is I, the Great Ape.
Yeah, we were just talking about, we got a lot of kind of conversations about, hey, we're going to get this news, we're going to get that news on oil. I'm like, okay, but by the time you get the news, the charts have already told you what's going to happen. So I'm just like, if you guys want to sit there and analyze the news 10 hours a day, go for it. But I'm going to look at the charts. That's kind of like the, that's what we went through this morning. We're also
the markets are speaking.
Yeah, the market is going to speak faster, But yeah. I was saying, look, if you have somebody like, say, on the macro, like Vita Gorilla, who for 7 years I've been following, and I have a track record of how good the Gorilla's information is. So it's like, okay, yeah, if V says something, it's like, okay, this can tell me which way the wind is blowing, right?
Yeah.
So that way I can apply those things to my trading on a higher time frame basis. But if there's someone else coming in with information saying this and that and the other, I'm going to watch them for like a few years before I start making trading decisions based on that. So I'd rather just look at the charts. It's less time, it's a lot less time for me to deal with it than trying to go sift through all the news. The trading the news is like, it's like you're a new trader and you don't really understand quite how to use the charts to your advantage. So you're trying to find an edge based on the news. And the problem with that is that by the time we get any news, the chances are the charts have already made the move, and now you are just providing entry or exit liquidity for rich people. So as far as the euro is concerned, we have this, we're probably going to see price make its way up to here, and there will be a small breakout trade if you're on a lower time frame, because what you have here is we're going to end the public show here in just a moment, but you have this kind of range where price has been bouncing around for a while, kind of in this more or less area. So as price exits that, there may be a breakout trade to, once price gets above, say, $6.7. But price will probably make its way up to like $6.9 or 8, and then start heading back down again. So if we're swing trading, which, everything's kind of in a bear market scenario, eventually there is going to be a reckoning, and price is going to head up on this sort of long, this long drop that's been going on for a month and a half or a month. There will be a move up. It's going to happen. I just don't think it's quite ready yet. I think I'm just going to kind of draw this, not necessarily to be seen as gospel, but we just broke a support, and then price is now back above it. We also have this support right here. So price may hang out where it is and then head up, kind of like this. It might just kind of pull this and then head up, right? Or it may actually continue down and then make its way up after that. And it may just go up to here. We don't know yet how it's going to react. We do know that this is a long move down, and there's going to be a move back up. But for the moment, unless the charts change, unless the algos tell me differently, I would be looking to sell pullbacks, and that would look like this. It would look like this. That's what I'd be looking to sell. And on a lower time frame, I could take advantage of this breakout right here, right above this box. On a low time frame, might be able to get a little breakout trade on that. So that's what I'm looking at for the euro. So, looking at the Dixie is not going to benefit me that much, because whatever I see on the Dixie is just going to happen on the euro chart or any chart that's a USD chart. It's fine to know which way the wind's blowing, and as we talked about yesterday, it's just kind of bullish, but up against resistance. So it's going to be moving up slowly. That's nice to know. But going on to look at the charts you're actually going to trade, that's what's going to help you. Let's go ahead and hop out of the public. We'll go into the private. V, I know you just got here. Go ahead and give us that send off.
Absolutely. Listen, guys. Don't sit there on the sidelines wondering whether you should do it or not. Listen, you try vanilla ice cream. You try out a flavor of chocolate cake or whatever, right? But you need to do Algo Factory. Join us. Make a difference in your bottom line. Let's get you that. Let's get you to fire your boss. Let's get you to profitable. AlgoFactory.tech. With that being said, Cowboy, take us away.
Lovely.